Hello everyone, this is Andrew from Spark Finance, and today I wanted to go over why is the technology of Bitcoin and blockchain potentially so revolutionary. So to start off with, we have Bitcoin. What is Bitcoin? Well, Bitcoin is a decentralized digital currency or cryptocurrency, as it's commonly called today. Basically, this is a system where you have a bunch of computational mathematical problems that are solved, and that maintains this digital currency. It creates new units of the currency, as well as validating transactions where if I'm sending the currency to somebody else or somebody else is sending it to me, that's all validated by complex mathematical equations being solved. So how does this operate? Well, it operates on this system called the blockchain, which is the underlying technology here. Blockchain is effectively a decentralized public ledger. So once again, this is a system that is decentralized across the world. All these different systems that are connected to the internet, what are called nodes, these are what make up the network. It's kind of like Napster, where you had individual computers connected to this overall network. And blockchain is the technology that basically enables Bitcoin to function. And when you have this system that was created about 12 years ago, it was created in a white paper in 2009 by Satoshi Nakamoto. And keep in mind, nobody knows who this guy is. It's a little mysterious how this all happened, but I'll put a link down in the description to show you the actual white paper if you want to take a look at it. But you can see what the original vision of Bitcoin was, which is very important because it's kind of mutated from that a little bit. To start off with, the idea was to basically get rid of the intermediary. Whenever you do a cash to somebody else transaction, a cash to cash transaction, you have an intermediary of a financial institution in between you. That engages third-party risk, right? That third party, there's problems that they could go bankrupt, they could be fraudulent, they could steal your money. There's also issues on their end. They have to validate that you are who you say you are. Think of how many ID you need to go to the bank and get a transaction done or something like that. What if we could eliminate all of that and have a system that was safe and secure online that everybody could access to be able to transfer payments to one another? That would be pretty amazing. And that was the original vision of Bitcoin. Instead of enacting in US dollars or euros or Japanese yen or the pound, you would use this decentralized currency and you'd be away from all of that kind of inflation and debasement of currencies where your purchasing power is destroyed by institutions that are outside of your control. Bitcoin was designed from the start to have only a certain amount of Bitcoin ever created, or in the Bitcoin terms, mined over the course of its existence, 21 million coins. So basically what happens is you have what are called Bitcoin miners. And the Bitcoin miners, right now, they do these things where there's block rewards and transaction or fee rewards. So when they're doing these complex computational problems that are not easy to solve, you have a bunch of computers specifically made to do the Bitcoin transactions and do these complex math equations. When they solve that, they're validating the information in the network. So if Peter wants to send money to Paul, they validate that transaction. If they're creating a new block, they also have the potential for a block reward, which is additional Bitcoins. And it's a little bit, a very technical process to go into all the details on that. But right now, there's a certain amount of Bitcoins created every year. And the end goal is to reach that 21 million Bitcoins. But you know, if the inflation rate's low, or like 2% or something like that, it's not really that significant. And once all these Bitcoins are in circulation, there will never be any more. So that's pretty amazing right there. It's not like a currency when you can just print money whenever you feel like it. So Bitcoin had this first mover advantage here. Now there's about 2,000 different cryptocurrencies, and they're all out there and they all do different things. The software, the technology behind it is a little bit different. But looking at what does Bitcoin function as now, right? You have these Bitcoin miners that turn basically time and energy in running these machines, which they made specifically the ASIC chips, ASIC chips. And they basically are made to do these computations. So when you have them running, they're burning a lot of electricity, a lot of power to go into this, and a lot of time and effort to validate all these transactions, right? So you kind of have this system that's very safe and secure, because if you wanted to actually do kind of fraudulent activities like double spend Bitcoins that you currently own, then you would have to own over 51% of that peer-to-peer network. You would have to have 51% of that computational power to be able to do any kind of fraudulent transactions. And keep in mind that Bitcoin, this is just, zeros and ones, a bunch of numbers and digits that are stored on the public ledger, the record of transactions. So when you have this can eliminate financial intermediaries. It sounded great. And originally, people were thinking, oh, this could be used to buy your coffee with Bitcoin. You could buy your computer, your car, your house. Everything could be transacted in Bitcoin. And where we are today is a little bit different from that. Bitcoin today is more stored as, it's a store of value. People are kind of speculating on it. They're purchasing it like they purchase gold as a store of value and to save their purchasing power for their hard-earned work that they've done over the years. And instead of being used as kind of like the day-to-day transactions right now, it's mainly only used for if you're going from one country to another. You used to have to use like MoneyGram or some weird financial institution to send money, and they charge you all these fees and they have to do all these background checks and everything and make sure there's nothing fraudulent going on. Now, if you're in Hong Kong and you're trying to escape and go to England and you have $1 million in Bitcoin, you just show up in England, you log into your account with Bitcoin, and you still have access to the Bitcoin. You can start spending it. You could turn it into the local currency. You could do anything you want. If you wanted to send your Bitcoin to somebody else, there's a very simple transaction. There's no extra work that you have to do to identify the two parties. It's all done by the network. So you just say how much you want to send, and you can put in a small fee there for the transaction cost, which is very, very minor compared to what you would be doing if you're sending it through some bank or financial institution. So that's the primary uses of it today. But also, you look at like the other innovations around blockchain technology in particular. Blockchain came out, you have a number of different cryptocurrencies. You have Ethereum and EOS and Monero and all these other ones doing different things with the same blockchain technology. There's 2,000 cryptocurrencies now. And when you're looking at it, you had initial coin offerings. This is an alternative to the IPO, initial public offerings that you have on traditional financial institutions like exchanges. And instead of that, companies are just releasing these coins and saying, this is, our business, to fund our business, we're going to release an initial coin offering. It's very interesting new technology that's come out and enables a lot of innovation here. This is something that nobody was able to do before to this degree. Of course, there's always some fraud and there's some bad characters in these different things, as you can see with Bitcoin. I mean, the early adopters of new technologies, even if you look at the credit card system, I believe it was like the porn industry started the credit card system being used online. Well, Bitcoin was used by a lot of kind of thieves and bad people in the beginning because they realized the ability of the technology. Now it's becoming more mainstream, and big financial institutions are doing it. Accounting firms are looking into how it's going to change their everyday life, right? Is this technology as big as the invention of the internet? The internet had a lot of naysayers when it first came out. And then look what happened over a period of 20 years. It revolutionized every part of our lives, right? So does blockchain have the potential for that? If you look at smart contracts, something that Ethereum is doing, and what the potential would be for that. A lot of people talk about real estate, right? So real estate right now, if you want to go and close on a house, you have to spend between $5,000 and $10,000 to do the mortgage and everything and get everything finalized. What if all that information was stored on public ledgers that was guaranteed by the system, so you didn't have to spend all the time like making sure there was no fraud or anything like that, and you wouldn't have to have all those people involved that would know all your personal financial information? Wouldn't that be pretty incredible if you could just quickly enact, the deed, the mortgage, the loan, everything would just go through a smart contract? It's a very interesting technology, and there's a lot of potential there, right? The other thing is with asset tracking. The basis of blockchain technology is digital asset tracking. We're seeing now, think about if you have like online collectibles, you can store like a digital footprint of a collectible. So if there's paintings that are physical, right? What if you had paintings online that you could still buy, sell, and trade, and it was tracked by a system on blockchain, right? You can see the digital assets there. And there's companies that are doing this right now with different cards. I saw this coming out a little while ago as well. So you're seeing a lot of innovation there, but where are the threats to this system? Right now you have Bitcoin had some issues in the past. It's very volatile. The price has been going up and down, but if you look on a long trend, it's been up. Bitcoin's over $20,000. It goes up, it goes down, but it always trends up on the longer term. It's been around for a long time when all these people were fighting against it, right? There were periods where the transaction fees got really high, and it would take a significant amount of time to get your transaction approved by the network. There's some bottleneck issues, but there's also other cryptocurrencies that are trying to immediately address those issues, right? So there's people in this industry that are trying to fix the potential threats to the system. You also have to look at, well, what happens when we have additional computer technology? Maybe it can hack the computational problems, like if we have quantum computing, maybe it can solve those math questions faster and kind of eliminate the network and be able to overpower it. That's yet to be seen, but from what I heard, it's pretty far off, right? Also, what happens when those 21 million Bitcoins are actually mined? Is that going to change this whole system that we have? That's not supposed to come for around 100 years when we get to that point. So it's still going to be significantly far away. At that point, everything is going to change to solely transaction fees to support the miners in the network validating every transaction, rather than right now where they're getting what they're called block rewards for making a new section of the blockchain. Each new section of the blockchain is a bunch of transactions. 5 people want to do a transaction. It takes all those, puts it together, and it tries to make a block to add to the blockchain. So that's what that is there. But you see these different kind of issues going on, and then also government specifically coming out against Bitcoin and blockchain. China tried to ban all of this. You had the US government actually came out with a law in 2014 that although this is literally a digital currency, the IRS is going to consider it a collectible. So that means if you want to go buy a coffee with your Bitcoin, or you want to go buy a new computer, that money that you spent, you have to pay capital gains tax on the profit that you have on the Bitcoin from when you bought it till when you bought the item. That's pretty insane. And imagine trying to use this in everyday transactions and then going through a year's worth of transactions to be able to pay the IRS. This happened back in like 2014. And yet Bitcoin's still going. Bitcoin's still going after China tried to shut it down. The only way that you can really shut down Bitcoin because it's decentralized is if you shut down the whole internet. It's not a simple process. This is a peer-to-peer network. As long as there are nodes running around the world, it's not like you can go in there and tell one company you have to shut this down. So that's the beauty of it being decentralized, and that was the vision when it was created. So now you look at all of the future potential of this. This is an amazing, innovative technology, and we're going to see over the next 10, 20 years how this is going to change all different areas of life. Look at the news headlines coming out, not just on the new highs or lows that Bitcoin is making, but on the technology and how it's being used by major investment funds, by how it's being used by accounting firms, by how businesses are actually trying to use this technology to manage their own accounts. So right there, you see why Bitcoin is so revolutionary and why blockchain is so revolutionary. Bitcoin is literally a threat to the entire financial system that we have right now, the US dollar world reserve currency. What if people don't need central bank money anymore and they can use a digital currency? What if blockchain solves a lot of the problems that we have with validating proof of ownership of different items? There's lots of work being done in this sector, and it's a lot of fun to go and track what's going on and see what businesses come out of this. So stay tuned. You can find out some more information about what's coming up in new announcements, and stay tuned to Spark Finance. Thank you, everyone.